also a part of the enterprise infrastructure. I envisioned this like I did this slide like a few years back. The whole idea was that I could have an enterprise chain infrastructure, permission infrastructure. I could have a decentralized infrastructure. This is what we're telling banks. If financial industry wants to participate in some of the elements of decentralization, what does that look like? Payments, mortgage initiation, securitization, these are all financial services activities. Can they not tie to different blockchain infrastructures and participate in those ecosystems? The biggest challenge that has transpired in the 2 years. So how many of you in financial services industry here? Just one, two, three. So what have you seen? Who do you work for? Amex. That's great. I know them really well. But what has been your observation working for Amex? And yours too, Niharika, as a financial professional. What have you seen in the last year or two? In terms of blockchain and DLT and financial services in general, like broad level observations.
I think for the bank's perspective, they consider now blockchain. I mean, they consider blockchain-based disruptions very real, so they are adopting. I mean, many of the banks have been forerunners in filing payments on blockchain and all. So they know that this is going to change the way financial services will be provided.
Mm-hmm. True. So remember I threw out a number. What is the overall valuation of all the assets in the world? Thanks for paying attention, guys. No, let me rephrase my question. What is the amount of assets today, bankable assets that we know of? The homes, the money in the system, and everything else. I like that answer. Some trillions. He's right. How much? Oh, there's some trillions. So it's 471 trillion, or 470 trillions. You said 480? Okay, then you win the prize. You win the prize, and we give you a bottle of water at the end of the day. That's the prize for guessing the right. Can you please give him the banana? And how much of this ecosystem today is crypto? $3 trillion. Small number, but this is a triple-digit growth from last year. So from financial services industry perspective, the reason why I put this here, that Amex wants to go into loyalty points. Your business is a closed-loop ecosystem. You're a bank, but you're also a card issuer. You're a merchant processor, so you have loyalty issues, you have liquidity issues, you have working capital issues. So you're looking into saying, what can I do to participate in the ecosystem, because you are also an intermediary in many different respects, right? And so if you look at Fiserv or FIS or Global Payments, they all compete with you in some small segments of this. And the worry is that if these ecosystems, the one that we just discussed before, handle all the payments, why do we need Amex? If they're able to handle transaction processing, at the end of the day, you're processing transactions. Or for financial institution, if you're dealing with mortgages and all the massive paperwork, and if I'm able to tokenize those mortgages, why do I need to do those elements? So that's something which, why I did this is that most banks will have, if they're not able to go down the permissioned blockchain route, is create permissioned blockchain elements, then can they not form rails with accessing payments on stablecoin, like USDC, for example? And that has been crossed. We have been discussing this with many of the payment infrastructures. Is can entities like Silvergate and USDC and USDT, and there's one Euro project that's happening now, as the tokenized fiat projects come into countries, including India, where if E-rupee comes into existence, then will that not change the way we move money? What happens to Paytm? What happens to RuPay? What happens to some of these applications that have been designed just to circumvent the ease of moving money and facilitating B2B payments and A2A, account-to-account payments? That's a disruptive agenda for financial professionals. The question for you CAs in the room is, how do you make sense of it all in terms of taxation, accounting? Because you're moving from auditing, because you're moving from a digitized infrastructure to tokenized infrastructure. And I wrote a paper on this, actually it's an Indian magazine, where I think that is a massive opportunity for technologists in the room. Because remember, the existing financial infrastructure is built upon batch systems. You have nightly batch, you have 8-hour windows, batches run, and the reason why you have running batch is because, why do we run batch systems? Anybody? Technical guys. spoke like a true technologist. Yes, resource optimization, but at the end of the day, we want to reconcile. You're processing all these transactions, so systems had to reconcile and say, okay, at the end of the day, this is what's happening, and I can only do this processing, repeating every transaction and going through a batch of these transactions and processing them. Correct. So these batch payments are relay of digital services. So suddenly now you're using tokenized systems, which means there's no need. I mean, at the end of the day, if I give you a 10 rupee now, that's the ultimate transaction we're going through. There's no back office systems behind cash transactions. So the tokenized fiat, which is meant to be digital version of cash, is meant to mimic exactly the same thing. Is how I give you a rupee, and there should be no back office functions. So how do you reconcile a system? How do you account for it? Things like intraday, midday liquidity, audit trails. What happened to this token? What are the risks behind it? Is where the challenge lies from a, so this system that I looked into as an infrastructure chain is, especially for a multifaceted banking system, you may have to have, like especially in Amex, for example, right? You have a loyalty business, which is also money. You have payment business, and then you have the accounts payable, accounts receivable. They will all have sort of access to these multiple chains, which will then drive that.
So my question is, let's suppose I take one use case as payments. So we keep having multiple blockchains on payments, one in Ethereum, Solana, Bitcoin, and stuff like that. So it's going to be like survival of the fittest, how things will look like. It's not like having Access, ICICI, the same thing.
Good question. Two things, right? One is, so remember the stack which you missed, I think. So we had 3 stack where we talked about the stable coins. So stablecoin is an application. So people, if you're receiving a stablecoin, you don't care if it's in Solana or Cardano or Ethereum or Bitcoin. You need a stablecoin, and you're relying upon the underlying protocol to give you that trust. Just like you rely on the internet, when you send an email, it goes, and you just trust it, it goes, right? That's what we're trying to achieve for value. So stablecoin is an application, and this is why I think for technology in the room, focus on digital ID. If I have to redo this whole thing, I will spend all my energy on digital ID, but that's something which I think, imagine you having an ID that's recognizable not just on airports, but also on any of the networks.
And also
one ID, one wallet.
Yeah. So also your question on the full stack versus single line service provider. So every blockchain will focus on one single service?
Yeah, so let me answer your first question first, about stablecoin, right? So payments has different flavors. You have P2P payments, A2A payments, C2C payments. You have security settlement payments in different, So this is like a stablecoin, tokenized fiat, or digital fiat. And it may run on whatever, but you care about this. So today USDC as a company does this service for you. So if you want to have a stablecoin, Ethereum, Solana, you can use an API, you can send your token, they issue a token on a new. So many of the application level people are providing that infrastructure that allows you to take the stablecoin and transfer it. So you shouldn't have to worry as a bank where it's sitting, as long as you have the faith in the application, you have the right audit mechanism to make sure there's a one-to-one backing of that. The question is, when the stablecoin comes to your infrastructure, you have small things like cash management systems, treasury management systems, which has to recognize how much money you have there at the end of the day. Right, and so payments are no longer batched, and you can hold payments, which is what many banks do just because of liquidity. They say, okay, large value payments, let's hold them because it affects the liquidity. You can't do that anymore. So that's the payment question, which means that at stablecoin level, you should be able to do all that, and you shouldn't have to worry about the underlying layers because you're dealing with the application. Your next question was?
Single stack blockchain services versus full stack. So will a blockchain offer all possible use cases?
No, that's another good question. So I don't think any single blockchain will have all the use cases. One, because there are proof of work, proof of stake. Like Solana is going after solving for low value, high volume use cases. Bitcoin becomes store of value, so it's low volume, high value use cases. So we begin to see those distinctions because of cost of. So this goes back to, somebody asked me a question on consensus. It goes back to and which I think no one really cares about, but to me, early days research that we had done, that your consensus mechanism is so much more important in deciding the use case. So when you look at use case, I look at all those 4 layers and I decide as to what is the right consensus mechanism for me to introduce this asset. So for NFTs, I cannot use Bitcoin, or I cannot use proof of work. It's too expensive, It takes a long time, and so Solana came across. To your question, is well, you changed the seat. I have to look your name again. Tanay. So from a perspective of NFTs, you turn the knob. It's less consequential than financial payments. It's less consequential than anything else. So I can basically give away focus on speed or scalability. Yeah, that's what I'm telling you. Focus on scalability, because I do need to. I expect much larger volumes of NFTs, but they have less financial consequences than, say, payments. Right, and decentralization can be also ignored in some cases with what Solana and OpenSea and Rarible. These are all centralized platforms who are giving you that capability, ignoring and making conscious decision to say we don't need decentralization because all people need to do. That may change, but that's an example of I would never choose that model for payments. I would never choose that model for L1. But NFT chose that model because NFT is trying to address a much larger scale, and in many cases, that community it's less consequential because if you move your Bored Ape Yacht Club, which is less expensive than $9 million, to be able to drive some of those functions, I think. Yeah.
So in the stable coins, there are different companies who are providing stable coins.
Yeah.
And we have to basically you can trade that relative to assets. So and one issue with these stable coins is they have to maintain some reserves so that the dollar that the stable coin that you're getting actually has value.
Yeah.
USDT also is maintaining some reserves. So why don't banks just issue us stable coins against our account? That is basically.
Yeah.
There's a collateral form stable coin.
Yeah. So have you heard? Actually, I stopped doing this. I'm supposed to give you the mic because they're recording this. So whoever asks the question next, I'll let you all have the responsibility of switching the mics across. But the question, I'll repeat the question for the audience. I have the mic already. Is what happens to if stablecoin is supposed to have proof of reserves behind the scenes, then why can't a bank issue a stablecoin on your behalf? And trust me on this, when I was building the payment network, I have a slide which we will not discuss here because this is not a stablecoin conversation. But the conversation essentially was that liquidity has a cost. So this is where things really come. I spoke to 36 banks back in the day as to why aren't banks issuing stablecoin. And most recently, for a consortium of 4 banks, they issue something called USDF. Have you heard of USDF? Anyone here? So this is the first time in history a regulated bank is begin to issue a stablecoin. And the reason why none of the big banks are involved, because remember, banking had a traditional model. Banking had a model of getting your deposits, multiplying it by 10, and hoping they make the right loans, and whatever money they come back, that was their sort of the profit, and they would give back, and they would have enough liquidity to meet short-term obligation of people like us in the room, right? And so, so capital has a cost. So if they give you a loan for a housing, what's the interest rate now here? 6%, 8%? 6%. If I give you automotive loan, 12%. If I give you EMI for phones, which is interesting. So you have all these little things that have value to what you do with the money. For stable coins, remember proof of reserve, which means for every money in the bank, I have to issue a stable coin. That business model breaks down because stablecoin as a payment instrument really have no interest. If they're interest bearing, then that becomes a challenge because what if that money is in your wallet versus it's in a bank's wallet? So the cost of, so it's a business problem, not a technical problem, is do they go with the existing model, which is a fat cow, it's giving a lot of milk at the moment, and they're able to milk it because of the fact that they have this business model come into play. And so what the crypto community has done, how many of you have been following stablecoins, by the way? None? How many of you have been following stablecoins? Tell me a bit more, not technical part, but what have you been following about?
So I just learned there are 2 types of stablecoins. One is that is actually backed by a currency, or one is algorithm adjusts itself to the price.
Yeah. There are 3 types. It's collateral backed, value on chain, and algorithms, algorithmic stablecoins. Shreyas, what's your thought?
Sir, my exposure to them was when I was choosing to kind of,
every single time I want to trade from Bitcoin, I try to like come back to a stable coin in case I felt that.
Park your money. Yeah.
Yeah, in case I felt that there was volatility. And that time I found that there's USDC, there's USDT, there's DAI, there's a bunch of people they picked against the dollar value. And like Akshat said, some of them have actually backed it up. Like USDC has actual backing of currency, whereas something like USDT does not. Whereas they're just constantly minting more like tether, but it's not actually backed by anything apart from.
Yeah. You know, good observations, right? And I'm going to ask a series of questions just to invoke, see a bit of dull elements in the room, but I'm going to invoke the energy back. Which is the highest traded?
USDT.
I didn't finish my question. Let me finish my question. What is the highest traded token? Not the highest market capital for USDC, which is the highest type of traded token in the entire cryptosphere. It's stable coins. It's higher volume than any crypto in the world. And Tether is number one in market cap, but they've also been laden with challenges in terms of not having the right amount of proof of reserve, because they were taking the money and having a good time with it in terms of investing and making money. And with anything which is cash equivalent, it's required by law in many countries to either have some sort of insurance and you have some, because you're accepting deposits, then you become a depository institution of sorts. So what ended up happening was that going back to the question of your interest, the question that you asked me, the interest element of where this is all heading, because the banks are stuck on their old model of taking money from you and lending it and getting the profits back, to attract more liquidity, because remember, we all can't be running nodes. So the easy way for all of us to enter this market is to buy the tokens, right? So that's why you see a high yield interest rates, 6%, 8%, 12% on stable coins, only because they want to attract more liquidity, which is giving a massive competitive pressure on banks to say, so you begin to see a massive outflow of capital from banks to stable coins, tokens. And to me, that's causing, I did a podcast last week on this, that it's interesting challenge. It's causing a lot of volatility and liquidity challenges, which will hopefully, this movement of fiat coming from traditional industry to stablecoin is hopefully going to do two things. One, it's going to increase the regulatory focus from the banking industry, which we've seen all over the world. Second thing it'll do is it'll let the banks wake up to change the business model. And that's why I think you see USDF, you should look into USDF. For the first time, a regulated banks has got together to issue a stable coin. And also, you guys are fortunate that you have a real-time payment systems. We have the burden of legacy. Our payment systems is really, really antiquated. We have a really, really old system. And US has given up on, I think, they're relying on stable coins to become the de facto real-time payment system in the US. Because FedNow, which is meant to be like your IMPLS or NFTS in India, it's only on paper at the moment. So if you look at the fourth interpreted letter from OCC, which is the entity that regulates the banking commission in India, that basically has talked about the fact that if we let private industries like banks issue a stable coin, you have a de facto real-time payment system in the country which is managed by the cooperative of banks, which is what ACH or Automated Clearing House does.